The market is currently closed. As of the last close on Friday, September 5, 2025, Neonode, NASDAQ, Neon, shares were trading at 5.11, marking a devastating drop of 17.05% for the day. This collapse followed an even more catastrophic freefall, bringing the total loss to nearly 80% over the last week. The raw numbers alone, a plummet from over 20 just days ago to barely over 5, tell a story of sheer panic and destruction. But the true story, the one the headline numbers don't capture, is the deep, almost palpable sense of betrayal felt by investors who had staked their hopes on a massive patent victory. The expectation was a multi-hundred-million-dollar windfall from Samsung. The reality, as revealed in the settlement, was a far more modest sum of $15–20 million, a figure so far below the market's inflated hopes that it triggered a complete capitulation. This single event perfectly encapsulates the tension between market narrative and financial reality, a chasm that can turn soaring optimism into a crater of despair almost overnight. The recent price action of Neonode has been nothing short of a textbook case in speculative bubble formation and bursting. For months, the stock had been riding a wave of anticipation surrounding its patent litigation against Samsung. Retail investors and even some institutional players had built a strong narrative. Neonode, a small innovative company, was on the cusp of a major legal victory that would validate its intellectual property and provide a transformative cash injection. The stock price swelled, soaring on trading volume that was a multiple of its historical average. This wasn't just a gradual climb, it was a vertical ascent fueled by whispers of a massive settlement figure, a 9-figure sum that would put the company on a new and stable financial footing, enabling it to fully commercialize its technology. The speculation was so intense that any news, even unsubstantiated rumors, would send the stock swinging wildly. Volume surged to over 11 million shares on the last trading day, a staggering amount for a company with a market cap that has now dwindled to a mere 85 million. This level of trading activity points directly to a high concentration of short-term traders and speculators, a dynamic that makes the stock incredibly vulnerable to sudden, negative news. When the settlement figure was finally announced, the reality of $15–20 million, while not insignificant for the company itself, was a devastating blow to the market's overinflated expectations. It was a classic buy the rumor, sell the news scenario, except the news was so disappointing that it triggered a cascade of forced selling. The initial pre-market sell-off was a sign of things to come, but the ferocity of the intraday drop highlighted just how fragile the foundation of the stock's recent rally was. The narrative had completely broken down, leaving behind a trail of decimated portfolios. Institutional ownership is notable, with firms like BlackRock, Vanguard, and State Street holding positions, and their activity will be crucial to watch in the coming weeks. Their positioning, especially after the latest drop, could signal whether they see any long-term value left or if they are exiting their positions, adding further selling pressure. To understand the full weight of this recent disappointment, one must look at what Neonode actually is, beyond the dramatic patent saga. Neonode Inc. is a Swedish company specializing in optical sensing and human-machine interaction, HMI, technology. Their core business revolves around two primary platforms, Z-Force and MultiSensing. The Z-Force technology is a proprietary optical sensing solution that uses a grid of infrared light to detect touch, gestures, and object presence. It's a zero-force technology, meaning it doesn't require physical pressure, which is particularly useful for applications where traditional touchscreens are not ideal, such as in-car infotainment systems, medical devices, and even rugged industrial displays. The company has been shifting its business model from selling hardware modules to a pure-play intellectual property, IP, licensing model. This strategic pivot is a key part of the investment thesis for many, as it promises higher margins and recurring revenue without the capital-intensive burden of manufacturing. The MultiSensing platform, on the other hand, is a more recent development focused on computer vision, leveraging advanced AI algorithms for things like driver and in-cabin monitoring. The company's long-term bet has been that its portfolio of over 100 patents worldwide represents a valuable asset that can be licensed to major players in consumer electronics, automotive, and other industries. The recent litigation with Samsung was supposed to be the ultimate validation of this strategy, a public declaration of the value of their IP. But the outcome has instead cast a shadow of doubt, not just on the specific dollar amount but on the broader question of whether their IP is as valuable as the market had come to believe. Looking beyond the recent market carnage, the core question for investors is whether Neonode's business model can survive and thrive on its own merits, separate from the episodic windfalls of patent litigation. The Q2 2025 earnings report, released in August, painted a picture of a company still very much in transition and facing significant headwinds. Revenues from continuing operations were a mere $0.6 million for the quarter, a 25.2% decrease from the same period in the prior year. This revenue decline, primarily driven by a drop in legacy licensing for printer and passenger car applications, was a clear signal that the underlying business is not yet on a solid growth trajectory. The company reported a net loss of $2 million, or 0.12 per share, a worsening of its prior year loss. Cash used in operations also increased, highlighting the continued cash burn. While the company still had a decent cash position of $13.6 million as of the end of Q2, a figure that will be bolstered by the Samsung settlement, the reality is that its operating business is still bleeding money. The expectation that the Samsung settlement would solve all of its problems was always a naive one. It was a stopgap, not a permanent solution. For Neonode to be a viable long-term investment, it needs to demonstrate a clear path to profitability through its core licensing business, not just through one-off legal victories. The path forward for Neonode is fraught with both risk and opportunity, all tied to the same expectation versus reality framework that drove the recent stock collapse. The opportunity lies in the possibility that the Samsung settlement, while disappointing in size, could serve as a powerful precedent. It validates the company's ability to enforce its patents against a global technology giant. This could, in theory, lead to more licensing agreements with other companies looking to avoid similar litigation. The company's focus on its MultiSensing platform, particularly in the burgeoning automotive sector for in-cabin sensing and driver monitoring, presents a significant growth vector. With the increased push for safety and autonomous features, this technology could find a large addressable market. The challenge, however, is execution. The company needs to translate its technological capabilities into tangible, recurring revenue streams. The reality is that this is an incredibly competitive space with larger, more well-funded players. The risk of technological obsolescence is always present, and the company's small size makes it vulnerable. The single biggest risk is the market's perception of its IP. The recent settlement, while a win, has de-risked the upside and, in the eyes of many, revealed that the patent portfolio may not be the gold mine it was once believed to be. This could make future licensing negotiations more difficult and less lucrative. The volatility is not likely to subside anytime soon, and any further news, whether positive or negative, will be met with extreme price swings. The market now sees Neonode for what it is, a small, cash-burning company with a valuable but perhaps not infinitely so IP.